Good morning, ladies and gentlemen. Firstly, my name is Mark Downs and I'm the CEO of Investor Meet Company. And really, before we started today, I wanted to apologise for the inconvenience caused by the technical issue that prevented you gaining access to the investor presentation on Tuesday. I know particularly how frustrating and inconvenient that must have been, and certainly not the experience we look to offer, but please do sincerely take my apologies to heart. Thank you. I'd now like to welcome you and introduce to you both Nicola Forster, CEO, and Robert Parker, CFO, to the RGB Investor Q&A session. Throughout this session, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab situated on the right-hand corner of your screen. Simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish where appropriate responses, and these will be available on your Investor Meet Company dashboard. I'd also like to remind you that this presentation is being recorded. Before we begin, we would like to submit the following poll, and if you could give that your attention for a moment, we'd be most grateful. Now, I know that many of you have been able to watch the recording of Nicola and Robert's presentation earlier this week ahead of today's session, with, of course, the purpose and objective of today being the opportunity to address any questions investor may have relating to the group's results and recent acquisition of Memory Crystal. So, Nicola, Robert, perhaps I could start with those pre-submitted questions, and then we can turn to any that come in throughout this session. The slides are in the background. Should you need them at any time, please let me know and I'll bring them up. And for investors, these will be available for download as well after the event. So the first question that we have is, for the purpose of memory, has there been dilution of existing shareholders' equity? And if so, how much?
Yes, there has been some dilution of the shareholders' equity. We're going to be issuing 9,739,130 shares as per the RNS that we issued on Tuesday. We'll take our shares in circulation to approximately 95.3 million. The key question that we need to ask ourselves is what that will do to earnings. And we expect it to be earnings enhancing. And the degree to which it's in earnings enhancing will be down to how successful we are at integrating the businesses. And our current EPS forecast per our brokers is 7.6 pence for 2021, and we would expect to see that increase as a result of the acquisition.
Thank you very much indeed. The next question, given the Convex acquisition and now the Memory Crystal acquisition, where do you see RBG in 5 years' time?
We still have the same aspirations we always have, which is to grow a professional services group by cherry picking the very best of what's on offer across this sector. We don't feel that's finished with the acquisition of Memory Crystal. We feel that what we've done with that acquisition is consolidate our legal services division around a best in class in the medium sector. There are still other areas we want to add to that, and what that means in terms of how big we'll get, I certainly have aspirations to be an over £500 million market cap company, but obviously it's important to do that in a measured and successful way.
Thank you. Great transaction with Memory Crystal. How competitive was the process and how long were the negotiations?
We've been courting Memory Crystal for over 2 years. It was competitive insofar as they had received a lot of interest and a lot of offers. However, I think the Memory Crystal management team had a clear vision of what they wanted to achieve. And from the outset, they were fairly confident about the fact that we were their preferred outcome.
The next question reads as follows: what do you see as the greatest challenges in integrating Memory into the existing structure and culture?
One of the reasons we targeted Memory Crystal is that their culture is very similar to our own. They are entrepreneurial in the way they operate the business, and their client base is quite similar in terms of being entrepreneurial, owner, founder, managed businesses. Nevertheless, they have been an equity partnership. They have been a private business, and we are a public business. And we will measure the integration carefully to ensure that we take the best of both cultures. And when we look at integration, we don't just look one way, we look both ways. So are there benefits in Memory Crystal that we can apply to RBL?
Thank you. Would you have expected the 8 million profit quoted for Memory Crystal to have directly translated into incremental PBT to RBG Holdings over that holding period?
The 8 million is profit before distribution for the partnership. So it won't be a straight transition through to PBT. We look at Memory Crystal and we look at EBITDA margins. Their EBITDA margin currently is around 16 to 17%. And we'll look to drive that forward as we move through the integration. Can I just circle back round to the previous question about the integration? And maybe Nikki could talk a little bit about the two businesses, because they're effectively not two businesses that overlap. They are, in effect, our perfect partner. Nikki, can we expand a little bit on the mix of business? Because I think that alludes to, like, you're not putting together the two same businesses.
Yeah, so if you can bring up the presentation for me, Mark, and I will just bring us on to my favorite Memory Crystal slide, which is this one, which actually shows us how different the businesses are. So in the year to December 2020, Rosenblatt's contentious revenue was 64%, where it's usually floating between 60 and 80%. On the left-hand side, you'll see Memory Crystal's split of business, which shows that there's 34% from corporate, 21% from real estate, 4% from commercial IP and tech advisory, which is 59% of revenues. So Memory Crystal have a different transactional mix to us, and they're a very transactional based business. And we see that as a really good fit. And it is my aspiration, and I think I did say it on the presentation itself, it is my aspiration to see us utilize the benefits of both brands, the contentious brand that we have out there in Rosenblatt, and I think the more transactionally led brand in Memory Crystal. Is there another aspect, Robert, that you wanted me to bring out?
No, it was just to the integration. So effectively, we're not putting two similar businesses together, and there's not a massive duplication. You know, what we're bringing together is the strengths of two different businesses. So yeah, so it's not as if you need to rationalize two similar businesses, basically.
And actually, Mark, if I may, this brings us on to the next question. The next question was, in what ways does Memory Crystal need to change and evolve to increase revenue per fee earner? Because of the mix of business in Memory Crystal, their revenue per fee earner will never be the same as Rosenblatt. There's no question that we have aspiration to improve that revenue per fee earner, but the way we will do that is in the same way that we did at Rosenblatt, around training and education and around understanding the need to scope and price better, so that we keep to the hours that we say we're going to do when we do a quote, and we only do and we keep to that charging, and we don't overscope and have mission creep. And in doing that, we will naturally improve the revenue per fee earner, as we did with Rosenblatt. But if we're looking at what the margins will be of these businesses, and those that have seen the presentation, Rosenblatt's margin is almost 40% net margin. Memory Crystal won't ever achieve that with the mix of business that it has. It will be a lower margin business. And again, to remind everybody, we will be reporting on a consolidated basis. So we will be reporting legal services as one P&L.
Thank you very much, and for taking my job. What I might do, Nicola, if I may, I'll leave these slides up for the next couple of questions, as they do relate to Memory Crystal. So the next question is, what is Memory Crystal's anticipated revenue and profit before members' remuneration and profit share for the year to 30th of April 21?
Not everyone obviously receives the analyst notes that go out, but there's an indication in Singer's notes of their forecast into the market. So they're looking at, for the 8 months of the remainder of this year, roughly around 17 million of revenue and 3 million of EBITDA. So that's only obviously 75% of the whole year, but that will give you an indication and a steer of what it would look like for the rest of the year. And that will be on the basis of salaries flow through the business as well, because obviously the numbers that you've been given previously are from a partnership before everything is distributed.
Thank you, Robert. And the final question that comes under the category of Memory Crystal is, why were Memory Crystal's revenue and profits before members' remuneration and profit share lower in the year to the end of April 20 than in the preceding year?
I take this one as well. Generally, with a business that has a steady run rate of services that it's billing for, and in odd years you have one-off years where you you have contingent cases that drop into those years. So between the 2 years, like historically, they probably had a steady run rate of 23. That's gone up this year because they've had one of the best year that they've ever had in the business. But the difference will be a contingent case that drops into a specific year. So there's a core running rate for the business, and then you get the odd one-offs every so often as the contingent cases drop in when they're successful.
That's perfect. Thank you very much. I would just remove the slides for the time being anyway. I guess the next question is probably more group results based, but what visibility do you have of forward revenues?
It's yeah, it's professional services, and look, we don't have long-term contracts. We have an existing client base that has consistently generated, and we add year on year. So what we look at is what the business is historically delivered. So that gives us confidence of what we could deliver rolling forward. We have one or two clients that probably have ongoing cases that give us more visibility, but it's more we look back and the volume of work and the customer base we have. That's how we look at visibility. That would be in RBL. In Convex, we look at the pipeline, and we see from the pipeline you can look at the potential success rate coming from that pipeline. So it's not an exact science. With Lionfish, again, it's based on the cases that they do and the potential opportunity we have to sell on the share of the settlements. I would say potentially that Lionfish is probably our more predictable part to our business rather than the professional services.
Thank you, Robert. I think the next 3 or so questions really relate more to RBL. The first of which reads as follows: can you talk about how meaningful the COVID-related dispute resolution business can be in the years ahead?
I think knowing what disputes will come out of COVID itself, we don't have a great deal of visibility on at the moment. There was a lot of talk, understandably, around restructuring and insolvencies because that was going to be inevitable. If you lock a country down, companies were going to go bust, but that didn't happen because of the government intervention, or not to the degree that we anticipated, and there's still government intervention. So I think, we all know there's going to be an element of crisis and contentious work will fall out of that, but we don't have visibility on what that specifically looks like today. But we have, as Robert has said, we forecast our revenues from looking at historical data, and we have a very strong dispute resolution flow of work into RBL, and in Memory Crystal they also have, 12-13% of revenues coming from that as well.
Thank you. The next question appears to be in 2 parts, but combined to one. But so I might read out the first bit, perhaps, and then give you a chance to respond. Did the legal business RBL really have its most successful year in 2020 in terms of professional services revenue, EBITDA, and gross margin, which exceeded the target of 35%? First, gross margin fell from 56.6% in 2019 to 52% in 2020.
Robert.
Yeah, we take the RBL business, and it's interesting because this question crashes into one question. The overall EBITDA margin was in effect dragged down by Convex. Convex had a negative EBITDA of 0.9 in this year, as opposed to 1.2 million in 2019. So if we look at the overall group, then there was a drag down, almost a 2 million swift 2 million movement due to Convex on the overall group. But if we look in RBL in isolation, it delivered 15% more revenue than it did in previous years, and in an absolute number, it delivered more EBITDA than the previous year. What you'll see is that our margin, our gross margin, will flex. It's depending on the mix of work that we do. In 2020, you'll see the spread of our work. Corporate delivered more in 2020 than it did in 2019. Generally, as a whole, the transaction side of our business is less margin producing. I said as a whole. deal by deal, it might be a bit more specific. So you'll get a movement in the margin depending on the mix of the revenue that we're delivering. Generally, I would say dispute work is a lot higher margin than the transactional fixed fee element of that side of revenue. So on an absolute basis, it delivered 15% more revenue, and it delivered significantly more EBITDA on the professional services side of the business. So yes, it did have its most successful year ever.
Thank you, Robert. Do I need to progress with the second part of that question? I guess you may have touched on it in your answer.
No, Mark, I would like to actually bring the second part of the question in with one that we've got on the live Q&A. So there is some confusion around the convex deferred consideration. So the question asked by James C is, can we clarify the current situation with the convex deferred consideration? Is there a deferred consideration? And the second part of this question was, has the write back of the convex deferred consideration, which obviously was not paid because the earnout was not met, has that affected the RBL EBITDA calculation, which of course it has not, because it is not part of RBL, but it has affected RBG. So Robert, could you answer that question?
Yeah, sure. So the write back was 2.6 million. So you'll see, in effect, our EBITDA is 10.2 million. That's inflated by the 2.6 million. So we've stated the adjusted EBITDA, which we consider our true EBITDA, because it's what's earned and not what's delivered by an accounting adjustment. So our adjusted EBITDA is 7.6 million. So we try to pull it out, and we pulled it out in the RNS, but that might create some confusion. But it doesn't impact the RBL EBITDA in any shape or form. It's just purely group.
And to answer the latter part of that, is there 1.1 million deferred consideration remaining?
Yes. Yeah.
Well, thank you very much indeed. Perhaps I can move on to the final question relating really to RBL. What has caused the rise in staff costs in RBL from 10.6 million to 12.5 million, an increase of 1.9 million, absorbing over 2/3 of the increase in RBL's revenue, when the RBL's KPIs in terms of revenue per fee earner, utilisation and realisation are better than in 2019?
I think it's quite interesting. You know, what doesn't get broken down is the amount of contractors we use within our staff costs. So that in effect has gone up quite significantly in this year, or 2020. So it's not the fixed cost base; it's the way we use contractors within our model. So you will see this boom, fluctuate year on year depending on the type of work that we're doing. So that increase in the staff costs, a large proportion of it, or the majority of it, will be the amount of contractors we're using in some of the cases that we're using. And it was always Nicola's strategy that we always build a business with a fixed cost base which is sustainable, and then as we get busier, then we flex the contractor base within our model, basically.
So what you have correctly picked up there is that it is more expensive to service that revenue when you use a contractor, and you will make slightly less money. But the upside is that when the revenue flexes, the contractor immediately reduces to zero. So you have an element of flexible cost base in such a heavy overhead business as a people professional services business. That is, I think, very important to have that flexibility.
Thank you very much indeed. We've got 4 questions remaining that were pre-submitted. They all, I think, probably more relate to lionfish. The first of which is, can you outline where you see lionfish growing to, and what is the visibility you have? So
lionfish is a very interesting business, and we have seen, surprisingly, a huge number of inquiries coming in. We were obviously in lockdown, so there was no networking, and I think it's a real testament to Tets, the managing director of that business, and his reputation in the sector, that our inquiry level was as high as it was last year, when many other litigation funders actually were not seeing a great deal of business. That's my sort of understanding. So I think that the visibility we have is, at the moment, we're building out that business off our own balance sheet. So effectively, that has a natural cap on the amount of cash that gets invested in it. So the natural evolution of that business is to look at how we resource it financially behind the new facilities that we announced this week, which are our retail bank facilities, that support our organic growth and our acquisition, we now need to look at another form of funding to enable us to scale Lionfish.
Thank you very much indeed. The next question reads, for a startup, Lionfish has done exceptionally well to earn pre-tax profit of £2.8 million, or 55% of the group's pre-tax profits. In view of this remarkable success, why has such an apparently low multiple been attached to the cost of the put option held by the 10% shareholders in Lionfish? Or are the profits for Convex budgeted to be lower in 2021, thereby making the multiple higher than appears from using just the 2020 numbers?
It's interesting someone's picked this up actually. So the standards, it's IRS 32, makes you value what the potential worth of the put option is. So you have to predict into the future. But reality, if I bring it back to why is it so low? Well, it's a negotiation that Nikki did with the minority shareholders of Lionfish to fix the value that we're prepared to pay them at a point in time. So that's why it's valued like that. Nikki's got a set parameter that she wants to deliver for Lionfish. And you're right, Lionfish could be exceptionally profitable into the future. But the negotiation has been is that that's where we want to fix the value as and when we move forward. But it's interesting it's picked up. It was quite a small adjustment. But yeah, they've picked up the valuation point of that. It's quite a detailed point, but as I say, the reality is it's the negotiation, the commercial negotiation, which fixed our value for Lionfish that we don't want to go over above. It will deliver more, yeah, exceptionally more.
Very important to remember that when these things are negotiated, they're done so without the benefit of knowing what will happen. So we negotiated those put call options prior to the launch of Lionfish, and I had a view on how successful it would be, but obviously those minority shareholders may not have had such a confident view. So in hindsight, it looks like a very good deal. It is a very good deal. It's the right deal for us. It gets them into the equity of RBG, motivates them to stay for the longer term, which is the purpose of it, because they will swap their equity at a point in time in the future for equity in RBG. And that gives them a long-term incentive. And you must remember that Tess particularly has come from an investment banking background where you can earn very good money. So we are competing against that industry there to retain him and to motivate him.
Thank you. Is the budgeted profit for Lionfish for the year to December 21 higher or lower than that achieved in the period to December 2020?
I think the numbers in the marketplace are the same. Yes.
Thank you. Well, the final pre-submitted question, if I may, has a greater percentage of the participation rights in Lionfish cases been sold in 2020 than will be the case in future years in order to provide seed funds for the business?
In effect, yes, but 2021 will probably be similar. It is in 2022 that we will start to slow down the sale of participation rights and start to seed off new arrangements. So as you quite rightly said, this was used to help seed funding, to help support the cash flows, and also to de-risk our investments.
Well, that's brilliant. Thank you so much. Well, that does complete all the questions that were pre-submitted by investors, obviously having access to the previous recording of the presentation. Perhaps I could ask Nicola, Robert, if I could ask you to open up the Q&A tab. Could I ask you to read out the question, perhaps even who it's from, and a response where it's appropriate? I know you must have touched on a number of these points, but where you think you can give a bit more clarity, that'd be great.
Absolutely. So Mark W asked, was there a specific catalyst for the timing of the deal with Memory? No, there wasn't. We would have liked to have done it a lot sooner. We certainly didn't want it to happen at the same time as our results, because we feel that it's clouding some of the other news that's coming through in our results, which wasn't our plan. But often with these things, they tend to fill the time available. Robert, I don't think you've got anything to add to that, have you?
No.
I'm going to say the name wrong, but Mazan says, do you have adequate capital to fund further acquisitions this year? We've got to remember that, as we've shown with the development of Lionfish and Adnitor, you don't need lots of capital to build this business always. If you want to do a big acquisition, obviously you do. I don't think, given integration work that's planned and the importance of getting all of the financial benefits of the acquisition of Memory Crystal done in H2, that it would be wise to do an acquisition of that size again this year. We have got other plans strategically that don't require the same capital. But obviously, we would look at how we're financing acquisitions going into 22 and beyond. Robert, do you want to add anything?
No, and as part of the announcement, we've increased the RCF in the business from 10 million to 15 million, and we took out an acquisition loan to fund specifically the acquisition. But people will be aware that we're a cash generative business. We're a profitable business where the key part for us is that we drive for profit. So in that way, we manage the capital exposure that we have, but we've got the facilities in place as a last case scenario. But it is a profitable business. It's a professional services business that consistently delivers profit year on year.
Alan C asks and says, congratulations on the Convex progress. May I ask if RBL achieved fees on all the Convex transactions so far? No, we haven't. And it has to be remembered that when Convex act for a client, they're selling their business, and often that vendor will have their own lawyers. So what Convex tries to do is introduce us into the equation to pitch, or as alternative lawyers, or specifically transactional lawyers. We have done some of their transactions, but we have not done all of them. But Memory Crystal have a broader range of corporate M&A experience, and I do know that we've already introduced them, and they've already been introduced to 2 clients this week since the acquisition. So that cross referral is already working. Bob M asks, you are unquestionably the vision and drive of this business, and so I haven't reread this. What is in place for succession in, God forbid, you got hit by a proverbial bus? Bob, I don't know if you saw the Capital Markets Day presentation, but one of the reasons I did that is to show the strength and depth in the management team. I've got a very good set of managers across all of the businesses, Tets, Mike, Barry in the legal services division. We've obviously acquired management in Memory Crystal. And I think it's fair to say that, I am grooming for succession, and there are discussions going on because there are people champing at the bit for my job, which I always see as a really good thing, not a bad thing, because it means that you do have that capacity to take. And we are working specifically on plans for succession, and that is already in progress. Mark W asks, how high is the probability of further M&A activity? Oh, sorry, I've answered that one. So Richard asks about the 5 contingent cases via alternative billing arrangements are being progressed, and that some of the larger investment returns provided are not in our market forecast, which they are not. Can you provide a little more detail about this, and why, and what method is alternative payment, and why not put it into the forecast? So we don't forecast our elephantine returns, and the reason they're not put into the forecast is if you had, in fact, Mark, could you bring up the slides for me? And I can just show you, if we look at, there are 2 slides on our litigation matters. So, slide navigator. Way down the back. There it is. So this is the elephantine matters within RBL. And as you can see on Shango, we've got a potential recovery of 75 million, on Mercury 65 million. That would throw all of our revenues out materially if you start to even take a percentage of these in as a potential recovery. So it is absolutely not wise to do so. Also, we cannot possibly anticipate in what financial period they will fall. And we do always sell these as they are the exceptional revenues. When we look at lionfish, though, and something that we will increasingly be doing in years to come, we're going to have a much wider spread of cases. And whilst at the moment we're forecasting the sell down of those investments, inevitably that will be replaced by forecasting the returns on investment. And that we will start to look to do in 2022 and further on. Robert, do you want to add anything?
No, just to say that
Chris says no and then talks. Who knows?
Yeah, yeah. I must think before I talk or speak. No one else predicts that this is a very difficult thing to do. The likes of Burford's, Manolete, no one predicts the success on when these going to drop. I think it's very, very difficult. We've tried to give some guidance, and I think by what we've done in the presentation is give the potential, but our numbers do not have any contingent work or contingent value in them whatsoever. So I think it's a better place to be than cloud them with accounting for contingent cases or percentage of contingent cases moving forward. As Nikki said, I think with Lionfish we'll get more visibility and we'll be able to steer the market on the consistent earnings that we get from Lionfish. But the larger ones, that's going to be very difficult.
So we're asked here by Leo, how do you determine how much RBG equity to use in the acquisition? It's a very good question, because we stated in the past that we would predominantly pay the majority in equity and the minority in cash. But with Memory Crystal, we paid 40% in equity and 60% in cash. And there are two reasons for this. Partly because there is quite a lot in their balance sheet that we believe we can drive out in terms of WIP and cash debtors to reduce the cash consideration, but also because at the time we struck the deal, the valuation for the company was around 55 to 59 pence per share, and we did not feel comfortable with that valuation. So a lot of the determination of how we use equity is based on our own valuation of the business. So obviously the public market has its view on the value of our business, and obviously we look at that and we look at the price earnings multiple applied to us. But we obviously have the market obviously is affected by other events like what the FTSE is doing itself and whether there is economic bad news. So we have our own valuation model for RBG, and we set our own strike prices quite often. And you'll have seen in the Convex deal that we struck a strike price for the initial deal at £1.20 and for the earnout at £1.40. And the reason the earnout was at £1.40 was because obviously the initial acquisition had delivered profits that would then move your valuation. So we actually apply quite a lot of science to how we determine the valuations and therefore what amount of equity to use. And I take dilution very, very seriously, and only dilute in a way that is absolutely going to be in the best interest of our shareholders. Robert?
No. I have nothing to add.
So have Convex, Stuart asks, has Convex seen any change in activity given rumoured CGT changes have not materialised? Robert, why don't you? You've looked at the pipeline a little closer than I. Do you have a view on that? I have a view, but...
Yeah, I think not significantly. I think what we see with Convex is that they're working with good businesses that are looking to sell. And I think of the deals they did, possibly only one of them was CGT driven. The rest were just the time the businesses were at and the value that they were getting, and they see that all through their business. We might have a similar CGT might change coming up now, but I think with Convex, a lot of it is just the normal timing for those people to exit the business, basically.
Yeah, I completely agree. And Mark asks again on acquisitions, when assessing acquisitions, what are the key 2 or 3 metrics that matter, e.g. ROI, EPS, enhancement? I've obviously said my piece on how we look at them, but Robert, why don't you give a bit more detail on how we look at the acquisition?
Yeah, look, obviously return on investment, we've got multiple things that we're doing in the business, and it's about resource allocation. We also look at payback, and earnings has to be a focus of everything we do, because that's what drives the value of the business for all shareholders. So around that, but also there's probably some softer things when we look at, if we take Memory Crystal, it just appears to be the perfect fit as well, and the perfect opportunity for us to bring our commercial nature to another law firm, really.
Great, thanks. And Stephen asks, can you help us better understand your dealings with Winross and the doubling of value of transactions between RBG and Winross and how the relationship will evolve? So for those of you that don't understand, Winross is the original partnership. It's had to be renamed. We effectively moved the trading and assets, or acquired the trading and assets, into a new shell company, which we called Rosenblatt Limited, and we acquired the brand when we did that in 2018. But we effectively left the original partnership behind, and with that, we left some cases that we didn't bring over because they were either in end stages or there were things we didn't particularly like about them or whatever. So there is a relationship between ourselves and Winross. We act for them. We are their lawyers, and we are have done work on some of the matters that were left behind for them. And they also continue to refer revenue into us, revenue that didn't come across with the acquisition. And it is that remuneration that you are seeing. And obviously there was a key transaction last year, which is why the number is high. How will it evolve? At the end of the day, we will take all revenue, whatever resource it comes from. We have to disclose this because it's a related party transaction, but we do obviously remunerate and pay commissions on revenue that we receive from other areas. So moving on to Mazin. Given the excellent results for 2020, what is a realistic organic growth rate for the Rosenblatt division going forward? What do you think, Robert?
Again, we don't do profit forecasts, so
no,
not in a public space. So if I can point you to the Singer's note again, we did an upgrade on the group trading for 2021. We're predicting total revenues of 30.3 million, up from the 25 of this year, of which RBL will contribute. I think what we're seeing with RBL as well, that we did 20 odd million in RBL, a phenomenal year, really. So for professional services, it doesn't act like other businesses. It doesn't grow year on year. Sometimes you get ups and downs, but we are predicting a small amount of growth with RBL, but on a group basis, and we always look at it on a group basis. It's about the diversified group. The numbers that Singer have in the market at the moment is to deliver 30.3 million this year.
And I think what will help is that we haven't obviously finished the acquisition of Memory Crystal. We complete that transaction hopefully in May, and I'm sure Singer's will provide a note that explains what the impact of that will be on our legal services division revenues. Bob asks, in the past you spoke of 2 family offices and/or wealth funds that were open to put up some 50 million to fund litigation. Where are you with these? The family office group that we work with and the high net worths across that group, which is what one of our minority shareholders in Lionfish is responsible for delivering, has currently got a circa 25 million commitment, and that is where we are at. We haven't sought to extend that relationship because we think we have a better way of structuring that going forward, and that's part of what I referred to earlier in our Q&A when I said that our next evolution for Lionfish was to look at how we're going to fund that business to grow it. And there may be basically a cheaper way of doing it than selling off. Although I mark up to the family office network, there may be an even more financially better way of doing it than this that we may seek to replace that with in the coming years.
Nicola, Robert, thank you so much. I think you've actually addressed every question that's been submitted during the live event, and thank you to all those investors that both pre-submitted questions and took the time to attend today and submit the questions during the live event. Nicola, I know investor feedback will be particularly important to you, particularly after such a significant acquisition, and perhaps I could ask you just for a few closing comments before I divert investors to give you feedback.
Yeah, so I wanted to say actually that I wanted to thank the retail environment. It is predominantly retail and sophisticated investors that we have on your platform, and we we've had some fantastic feedback. We welcome the engagement. As a business, we particularly look for drive retail engagement with our business. Obviously, it's important to have a good, stable shareholder base with your institutions, but I've always wanted to have a strong retail engagement. And to that end, as we've said before, we will seek to be as transparent as we can possibly be within the confines of being a public company, and that we cannot obviously give forecasts. And if you do have any questions that I haven't answered today, do feel free to submit them. And to those of you, I know a couple of you sent some questions after one of my presentations in January or early February and didn't get an answer until late March, for which I apologize, but I hope today's acquisition, or the announcement of the acquisition this week, will answer why it just got a little bit busy in there. And so it isn't that we won't answer them. Sometimes it is a bit slow, and I do apologise for that. But we are a tight team. You know, we're not overstaffed. And thank you for taking the time to dial back in today, because and it wasn't Mark's fault, problems that they had, and I thank that team for moving heaven and earth to get this back on for us this week. Thank you.
Nicola, Robert, thank you very much. And Nicola, thanks for taking part of my role during today's presentation, so thank you. Can I please ask investors not to close this session, as you'll now be automatically redirected for the opportunity to provide your feedback. If you access this meeting from our website, then the feedback page will appear. But if you access this meeting via the link sent you by email, you'll simply be asked to log back in to submit your feedback. And I'd be very grateful if you could spend a little bit of time. I know it's highly valued by the company. On behalf of the management team of RBG Holdings, I'd like to thank you for attending today's presentation and Q&A update. That concludes today's session. Good morning to you all.